It's time to get comfortable with risk-off trades. Over the past 3 weeks, the Dow Jones Industrial Average lost 4,000 points, or more than 10%. In many ways, the trade was obvious. Between central banks raising interest rates, oil and gas prices soaring, Russia's war with Ukraine, and the COVID lockdown in China, stocks were destined for a correction. And with the Federal Reserve set to raise interest rates by another 200 basis points this year, and the European Central Bank expected to kickstart tightening in July, the bleed in stocks will continue. The stock market sell-off had a significant impact on the Forex market. Now, there's always a lag. You can see that in this Euro-Yen chart, where the crash doesn't really begin until early May. Also, in this Aussie-Yen chart, it tried in April when the stock market crash began, but it didn't become a real move until last week. We made a lot of easy money riding the risk-off mood this week. 245 pips over 4 trading days. There were plenty of opportunities, but the question is, which one to pick? If you watch my previous videos, which I link to in the description below, you'll know that the classic risk-off trade, the trade when investors are nervous and stocks are selling off, is to sell risky currencies like the euro, the Australian dollar, and New Zealand dollar, and buy lower yielding currencies, the safer ones like the US dollar, the Japanese yen, and the Swiss franc. But do you close your eyes and buy blindly? No, you have to have a strategy. My strategy is to combine fundamentals with technicals and market sentiment to filter and find the best trades. My favorite risk-off trades are almost always the Japanese yen pairs, Aussie yen and Kiwi yen in particular, unless there's something unusually positive happening in that part of the world, or CAD yen, which I love to trade if oil prices are falling. However, the idea that I want to stress is that at some point these yen pairs will become deeply oversold, and it'll be difficult to pull the trigger to sell even more if you think stocks are going to fall. So what do you do in that case? When that happens, I love to turn to the crosses. At the beginning of last week, I was all over the long yen, long US dollar trades. But then at the end of the week, I shifted my focus onto Euro Aussie and Euro Kiwi, knowing that quote unquote high beta or inherent volatility of the Australian and New Zealand dollars would be different from the euro, for example. We made some very nice pips selling Euro Aussie because, these central banks, Australia and New Zealand, have been raising, well, at least New Zealand had been raising interest rates for some time, and the Aussie was very deeply oversold, and also had, the negative Chinese COVID impact that they would have to grapple with. Whereas the euro data, these Zeus numbers were starting to improve, and there was some murmur that they could begin raising interest rates in July. So we turned to buying euros and selling the Australian and New Zealand dollars because in a risk-off move, all 3 of those currencies would suffer. But I believe that the Australian and New Zealand dollars would suffer more and the euro less because there were different dynamics in terms of the monetary policy outlook. Now, let's take a look at how the week played out specifically. We started this week with shorting pound dollar and going long dollar CAD, both leveraged on my pro-US dollar short risk view. US yields also continued to rise, and in the case of the Canadian dollar, which I loved to the short side because oil prices were falling, and the week before we had softer Canadian IVPMI and labor market numbers. Technically, pound dollar was in the sell zone, and dollar CAD was in the buy zone, and both turned out to be wonderful beginning of the week trades. We also sold the Canadian dollar against the Japanese yen at the Asia Open on Tuesday, and the decline happened quickly with very little follow-through. But thankfully, our money management parameters still allowed us to bank some quick profits in Euro yen, CAD yen, and Kiwi yen that night. Now let's shift over to Slack to see how everything played out. Going to Slack, you can see that we made 245 pips this week. 43 pips on Monday, 96 pips on Tuesday. Every single one of my trades are time-stamped. I'm going to scroll up to Monday just to show you some of the trades that we took. For example, we went short Kiwi yen. Well, we did, that was a little later on, but this is where we have Sunday Asia Open as well as Monday. And you can see all of the trades have charts as well as explanations on why they're happening. And, we went long dollar CAD, and you can see pound dollar hit target. CAD, we banked target pips in the first half of the position, and we also Kiwi Swiss hit target. And then during the U.S. session, we took a couple more trades, went long dollar CAD, short CAD yen, had a couple more trades, CAD yen, banked almost 20 pips there. So on Wednesday, we did not trade. We don't trade on Wednesdays because I never trade ahead of the U.S. retail sales report. But on Thursday, we resumed trading. So let's go ahead to Tuesday. And Wednesday evening, which is Thursday morning, we resumed trading. The day before, in 48 hours, made 139 pips. And I said we will not be trading Kathy trade signals ahead of US CPI because it's a big number. And I thought that the dollar could weaken as a result. But at Asia Open, resumed trading. We sold dollar, yen, euro, Aussie. You got your beautiful charts here. And before I could even write the explanation, we had our profit targets hit. And I loved euro, Aussie in particular because we had a double zip buy signal. And I love the confirmation from that. Euro, Aussie, dollar, yen was hit. And then we get an explanation that I provided anyway on why we took the trade. So more trading, and that's how we basically ended up the week. And we moved away from the yen pairs on Thursday and Friday, particularly Friday because they came deeply oversold, and instead shifted to Euro Aussie. We sold Euro Aussie. It moved from the zip buy zone, which is the green area, into the zip sell zone, and that hit profit target pretty quickly. We revisited that same trade in the New York Open, and that became a really, really nice winner. I actually posted it in my Chat Kathy room, and I posted on how this became a huge winner in Euro Aussie. We had sold there, and it ended up selling off very aggressively in the New York session. For a nice tidy total of 245 pips, trading 4 days this week. And over the past 3 weeks, we made over 500 pips. So if you want to learn my zip strategy or trade with me every day, I invite all of you to check out bkforex.com.